Well, the first round of big tech earnings are in, and despite some lousy numbers from Google and Microsoft, it seems the Bulls have won yet another round in this earnings season that is quickly becoming known for bad news, but good reactions from the stocks. What's up, guys? I'm Nobody Special, and let's shrink my big melon of a head and get right into these numbers. First things first, let's take a look at Microsoft and check out this stock after hours. They were originally a little bit volatile because the company posted a top and bottom line miss, and you'd think the stock would be down on that news, but wait, it's 2022, and everything was going just fine. The stock was actually down about 1% or 2 right up until about 6 o'clock when on that conference call, the CFO said she expected double-digit revenue increases for 2023. And with that, the stock rocketed at least 6%. It's now up 5.3% after hours, or $13.50. So the market really liked that double-digit revenue that Microsoft was calling for on their conference call. Somebody forgot to tell everybody that you need double-digit revenue next year just to break even with inflation. But right now, investors are not really paying attention to that. We'll see if that holds tomorrow morning. So looking at Microsoft's numbers real quick, Microsoft reported Q4 earnings on Tuesday, missing investors' expectations on the top and bottom line, and the company also missed expectations for its all-important intelligent cloud business. Revenue was $51.9 billion versus $52.4 expected. Earnings were $2.23 a share versus $2.29 expected. And I just want to draw your attention to this point right here. Despite the miss in the company's intelligent cloud business, Microsoft said Azure and other cloud services revenue was up 40% year over year. Now, that sounds like a pretty good statistic, but if you recall from the last 2 consecutive quarters, Microsoft Azure growth was up 50% year over year, now 40%. So growth in Microsoft's all-important cloud business is starting to show signs of slowing, and that's been their bread and butter for a while. But again, none of that matters right now because this stock is ripping higher after hours, after that announcement of the double-digit revenue growth for next year. And again, double-digit revenue growth doesn't mean what it used to mean because these days we have double-digit inflation. That's just Microsoft. Moving on to Google. Similar story. Initially some volatility after hours, but right now Google is up 5.23% or $5.51, trading at almost $111 after hours. And taking a look again, Alphabet also missing on the top and bottom line. Alphabet earnings miss estimates, ad revenue beats, but stock pops anyway. Google parent company Alphabet reported earnings that missed Wall Street estimates after the closing bell on Tuesday. The technology giant said adjusted earnings per share hit $1.21 during the second quarter compared to $1.32 expected by analysts, according to Bloomberg data. Now, the one silver lining to this report was ad revenue totaled $56.29 billion during the period, topping the estimates of $56.14 billion. If you recall, a lot of people were saying Google was in for some very bad results because those Snapchat earnings were just absolutely god-awful a couple of days ago. And a lot of people, myself included, were suggesting that that bad ad spend over at Snapchat was going to translate into bad ad spend over at Google. Well, according to this report, that is not the case. Google's ad revenue surprised a little bit to the upside, but again, the market was pricing in some really terrible numbers. Now, the one earnings report that came out today that actually surprised me to the upside significantly was Visa. I thought the numbers from Visa were pretty good, and of course, that's the one stock that's down after hours. Visa right now is trading down $2.49 or negative 1.17%, right around $2.10. So what's going on with Visa? Visa profit sales past estimates on resilient consumer demand. Visa beat estimates for quarterly profit on Tuesday as resilience in consumer spending so far and a summer travel boom across much of the United States translated into higher card spends. After being holed up at their homes, pandemic-weary Americans are splurging on travel and other leisure-related activities, helping the economy to stay on track despite an onslaught from inflation. Major U.S. banks, including J.P. Morgan Chase and Citigroup, have in recent weeks pointed to the resilience in consumer spending in the face of an uncertain economic outlook, a welcome sign for card companies. This, of course, flies in the face of a lot of the data we got over the last 24 hours or so, where Walmart guided down and Weber Grills and Bed Bath & Beyond and any number of other retailers were having trouble. But consumers are still putting at least the staples on their credit cards, and that translated into good earnings for Visa. The world's largest payment processor raked in higher revenue as payment volumes jumped 12% during the third quarter. This is Visa's third fiscal quarter, helped by a 40% surge in cross-border volumes. Travel-related cross-border volumes were 16% above 2019. And cross-border volumes, those are some of the most profitable transactions for Visa, where they take in those payments for overseas. It seems like American travelers are taking advantage of that strong dollar, taking more trips overseas where their tourist dollars go further because of that exchange rate. The strong dollar actually helps Visa, which goes contrary to what we've heard from just about every other company that's reporting currency headwinds. In this case, the strong dollar is actually helping Visa because it's resulting in increased cross-border transactions, which are incredibly profitable for Visa. While a company like Walmart may get hurt if consumers move their spending from higher margin clothing to low margin groceries, Visa gets their cut just the same, said Scott Lieberman, founder of TouchdownMoney.com. Whether people buy champagne in a bull market or beer in a recession, Visa stands to earn, said Lieberman. Joke's on him. I buy beer during a bull market and a recession, but Visa posted an adjusted net income of $1.98 per share, handily beating the $1.75 a share expected by analysts. But again, if you ask me, Visa just posted the best report out of all of them, and Visa is the one stock that's still down after hours, although just since I started recording this video, it's gotten back some of that, now trading at $210.89, down to $1.60. So long story short, the big tech companies, Google and Microsoft, both posted top and bottom line misses, disappointing quarters, slowing growth, and yet the stocks are up after hours. This is another case where the expectations for this quarter were just so low that despite posting lousy results, these company stocks are up after hours. Now, as I mentioned in my live stream on Friday, what I am seeing in the charts, this is the chart of the Nasdaq going back about 8 months. I saw that we were in this descending wedge pattern and that we had just broken out, back tested, and were moving higher, and that we still hadn't gotten any volume and we still hadn't taken out that prior high, which is necessary to confirm that breakout. And that prior high was right around 12,300 on the Nasdaq. So these reports that we got today, obviously this isn't enough bad news to make this a false breakout and send us back down. Now, will this bring us higher? I don't think so, but we've got plenty more news going on this week. We've got Meta tomorrow. We've got Jerome Powell tomorrow. We've got GDP on Thursday. We've got Apple. We've got Amazon. There is so much more going on this week, so we don't know where this is going yet. Again, the key level I'm watching on the Nasdaq is that 12,300 prior high. If we get a move above that with any kind of volume, that tells me the Nasdaq is moving significantly higher. We still haven't hit that level, so I'm not convinced that we're out of this bear market just yet. Again, I encourage you to go check out other channels and other guys' TA, because not everybody looks at the data and draws the same conclusions. I don't do echo chambers, and I welcome the challenge. If you see something in the charts that I don't see, please call it out in the comments and let me know. More bad news, but the expectations were so low that the investors just don't care, and it looks like the stocks are heading higher. Those Visa earnings are just not quite sitting right with me, though. That looked like a really good quarter from Visa, and I'm really surprised. Of the three big ones that reported today, that Visa is the one that's still in the red. That's the one that should be positive, if you ask me. Just a reminder, I'll be live streaming Jerome Powell's press conference tomorrow, starting at 2:15 p.m. So please like this video, subscribe to my channel, and I'll see you then. Till next time, live small and dream big.